It is 11:35. Welcome back to the big show for your Tuesday here. Dwayne Murley in studio and Nathan Fisher in studio. Bob, he's going to head on out, and we're going to hear more about Bob's adventure that he's taking part in today, tomorrow during the big show. Want to remind you the keyword of the hour this hour is bank, B-A-N-K. Log on to WHOradio.com or 600WMT.com and type in the keyword bank for your chance to win $1,000. And we are being brought to you by the Iowa Agriculture Water Alliance. And as you know, clean water in Iowa, it starts right here. In fact, I'm going to be with the gang from the Iowa Agriculture Water Alliance tomorrow. We're going to be up in Eagle Grove talking clean water, and you can find out more about that at iaagwater.org. So lots going on tomorrow. Bob is going to be on the road tomorrow as well. He'll actually be in Boone during the big show. So we'll have another big day tomorrow out on the road. Right now, though, Brian Hoop's joining us, and Brian, we appreciate you hopping on the big show here today.
Hey, Dwayne, I'm always glad to talk with you. We've got markets moving, pretty strongly higher last week, but to start off this week, we're a little bit more on the defensive posture, and it's all related to weather.
Yeah, I was going to ask you about that. I was telling Bob, the markets were trading trading higher yesterday. I told him about this time yesterday. I said, boy, I hope we don't have a turnaround Tuesday, but that looks like what we're seeing here today, and you say a lot of that is being driven by the weather right now?
Yeah, we're pretty much driven by the weather as far as price direction goes. About 95% of what we price on a daily basis is going to be the weather forecast and how it affects our markets. And so, about this time a week ago, last Tuesday, we were starting to move higher as there was forecasts for hot weather of this week. And we had a crop report, on last week as well. We priced in a lot of that and then pulled back on Thursday because of cooler temperatures that were forecast. And that was going to be after this week. Well, by Friday and Sunday night, those forecasts had kind of changed once again, and they were expected to be hotter. The hot periods were supposed to extend. But once again, those models flip-flop. But we gapped higher Sunday night, but by Monday's afternoon's close, we were well off the session highs on the lows of the day in both corn and beans. And then we gapped lower overnight as crop conditions improved 1% for both corn and soybean ratings. Although they are below last year's levels, they did show an improvement. This week it's expected to be very hot, very dry, with essentially a heat dome setting up over Iowa and the surrounding states. Now, going forward, that's what the market's trying to anticipate, and that's why we saw lower prices last night, lower prices for the most part this morning. We have weather models that'll update at midday. They haven't done that quite yet. We have other weather models that'll update tonight, and so that'll give us new direction on the days to come. But it feels like we're kind of running out of time here on a weather issue. We're getting into mid-July. Forecasts are running through late part of July. And from there, we really need to see hot and dry weather be extended if we're going to have higher prices for corn and soybeans to go forward. So there is some states that have, crop ratings below year-ago levels like Iowa and Illinois, Missouri, and South Dakota, Nebraska. Those are all states with crop ratings for corn less than last year. Really bold watching going forward, because that means we probably won't have quite the big crop as we did a year ago. States Wisconsin, North Dakota, Minnesota are the ones that stand out that have a bigger crop rating or a better crop rating than a year ago.
Yeah, speaking of crop rating and harvest numbers and so forth, wheat's trading about 12 cents higher right now. Is a lot of that driven just the fact the wheat's not out there right now?
Yeah, the winter wheat crop, is not going to be affected by the weather. It's being harvested. About 2/3 of the crop is harvested, so normally we get some sort of post-harvest rally, and Kansas City is leading the upside today. Minneapolis kind of a follower because that crop's still being grown and will be harvested starting in the next 30 days or so. There's a lot of concerns about the winter wheat crop as far as actual yields. They are coming down in USDA reports, and we'll probably see another lowering of the yields in the August supply and demand report. Also of note, and we noted this last week, was that Ukraine has shut down a lot of the ports that Russia ships their wheat from, and the largest port that they ship their wheat out of was shut down completely over the weekend. And so that kind of opens the door for some U.S. wheat exports, and we mainly will export our winter wheat crop and keep our spring wheat crop close at home for milling purposes.
Yeah, I was going to ask you about that because I've been reading about that all morning, just the fact that, we've literally almost have two wars going on right now, and that could be supportive to the grain complex.
Yeah, certainly the war between Ukraine and Russia has been supportive, especially to wheat and to corn to a lesser extent, and probably will continue to be, especially if those ports for export are cut off. The war between the U.S. and Iran, slowing down the strait, and as far as shipping goes, it's led to a rally in crude oil. Probably had minimal effect here recently on the grain markets as we're more focused on weather and how big of a crop we're growing in here. This spring, it was very important when we had the war going on because it impacted our input prices, and the market needed to put that premium in to incentivize farmers to plant enough corn acres, enough soybean acres. We don't really need that incentive right now because the crop is planted and growing, and we're really focused on how big this crop potentially could be, and if this weather pattern stays hot into next week, or if it starts to break down and we see the much cooler temperatures that right now are being advertised by the 25th of July, we could be looking at 10 degrees cooler than normal, which would be a big break from the heat that we're seeing right now.
Yeah, absolutely, especially as we see these fields, pretty much full tassel right now, and pollination's going to be kicking off.
Yeah, absolutely. It's a critical time of the year, especially for the corn market, because we're tasseling. A lot of crop is trying to tassel. Soybeans, it's a really a critical time of the year, but even more so as we get into August. If the rains don't come or if it stays dry, we certainly could see soybeans really take another run higher. And they were just at the $12 mark and not that far away, just a dime away from that. So it's not out of reach or stretch of the imagination if we get into August to see prices move to some new highs and take out the 10 or the 12.10 to 12.20 area would be an upside target.
Okay, well, very good. Hey, how about meal right quick? What's driving that today?
Oh, yeah, the meal market is done almost the entire year has been spread against soybean oil, and soybean oil has been, really a strong market here recently. It's a little surprising. Bean oil is trading lower today with the crude oil trading higher, but that meal is gaining some strength as we're unwinding some of those meal and oil spreads. And in the meal market, it's one of the few bright spots, one of the few things that are green as far as the corn and soybean complex goes.
Okay, well, very good. Yeah, just meal and wheat right now showing greens. So, hey, we're going to let you go for about an hour and a half. We'll talk again a little before 1 o'clock. But in the meantime, how can our listeners reach out to you, Brian?
Yeah, you can reach me. Direct phone number is 417-501-5132, or you can go online to MidwestMarketSolutions.com, find a list of all of our offices around the Midwest.
All right. Hey, we'll talk again a little before 1 o'clock, Brian.
Sounds good. Thanks, Dwayne.
We Speak Farm. Today's top stories in agriculture and the analysis you trust. This is The Big Show.
It is 12:54. Welcome back to The Big Show for your Tuesday. And as promised, we've got Brian Huth back with us on the telephone. And Brian, I was hoping we could touch on the livestock trade here before we wrap the Big Show up, showing live cattle and feeder cattle sharply lower right now, and hogs are trading mixed with front month contracts a touch higher, with the deferreds just a little bit lower, but cattle trade today sharply lower.
Yeah, unfortunately, we're seeing weakness in this cattle market. I think August cattle have been down for the 12th consecutive session, including today's trade. So from a technical standpoint, we've taken out the June lows, we've taken out the March lows, and we are testing the lows that we put in April. And, it seems like a foregone conclusion. We'll be making new lows here soon and getting down into the lows for the month of March. Before the end of the day, it's a bearish technical pattern, no doubt about it. When you're talking about going back all the way to March or 4 or 5 months away, that's bearish, certainly. And it's coming on the weakness of cash markets, which have been lower for at least 3 weeks in a row. Probably going to see week number 4 this week with lower cash trade. Cutout values, we thought we'd see a little bit of weakness after the 4th of July. Typically you have 4 main grilling seasons during the course of the summer. You start off with Memorial Day and Father's Day, then it's 4th of July, and then your last big grilling season is thought to be Labor Day in September. So we're past 3 out of the 4. Demand usually softens this time of year, and we're seeing that with the cutouts. They were down over $7 yesterday, more mixed trade at noon. But fear is that these cutouts will continue to slide, similar to what they did last year. And with the futures sliding, the cash markets will be weaker as well. And really the only supportive feature here for this cattle market is the discount that the futures are already holding to the cash markets.
All right, exactly. So how about the hog trade? Seeing some higher trade here over the noon hour.
Yeah, not bad trade here in the hog market. We talked about lower technicals for the cattle market, but it looks like the hogs have finally turned the corner and started to see improving technicals really about a week ago from a chart standpoint. We had a lot of weakness all throughout the spring and into the summer months with the cash markets not moving as high as they normally did. The futures anticipated the cash would come up into the summer because of stronger demand, stronger grilling season. That did not happen, and that led the June and July futures to drop down into where the lean hog index is. Well, now we've started to see a little bit of a pickup in those cash markets, and that's helping the futures markets to recover. Also, the funds have really gotten out of a lot of their long positions, and now they're starting to buy back in slowly because of the change in the trend. With the fund buying coming into the marketplace, that's enabled this hog market to see a little bit of a bounce off of some long-term weekly chart support.
Okay, well, very good. Hey, Brian, as we wrap up here, how can our Big Show listeners reach out to you?
Well, Dwayne, you can call me directly, 417-501-5132, or you can always go online at MidwestMarketSolutions.com.
All right, Brian, as always, thank you for your time today here on the Big Show.